Hello everyone, this is today's video analysis for July 23rd, 2019. Today we're taking a look at the USDCAD, the US dollar versus the Canadian dollar. For today's trade analysis, a couple things here on the daily time frame. First is the black trend line, very important. The currency pair has for quite a while now been in a downtrend or a downward movement for the past couple of months, going back into May, capping out high up here into the mid to upper 1.35s, top of the black trend line, went down a bit, and then retraced a good bit back into the 34.25-45 level, the green zone, and then made another surge lower. Over the past several weeks, we have been contained within a range down here, the black box at the bottom right-hand corner of the chart, pink zone at the bottom, support 1.302510, yellow zone and blue zone, so somewhat of mid area support and resistance, and then the green zone at the top of the black box, our main area of resistance. You can see that over the past several weeks. That's 3140, 1.3155 into that green zone. What's interesting about the green zone, not only has it been resistance here, we can see that's where the black trend line comes into play as well. So it gives us an increased expectation of resistance here at the green zone, because not only do you have the trend line, you have horizontal support resistance here inside the black box. And if you look far left hand side of the chart, and we'll just put a circle around it, let me draw it out here, we see support historically. So support where the blue circle is, current area of resistance. Let's zoom in a little bit, and there you go. You can see that resistance here. So first thing, when we're talking about our three trading decisions in the daily trade room, one is, do you want to buy it, do you want to sell it, or do you don't trade it? I think buying right now would be a little bit difficult within and underneath that green zone. It doesn't mean you can't, it just would be, when you're talking about risk versus reward, it would be more difficult to buy when it's had such a difficult time throughout the month of June and now July, breaking above that green shaded area and that resistance zone. So buying within and under the green zone becomes difficult, because so far for the past couple of months we've had a very difficult time breaking through there. It doesn't mean it won't. It just means you should have some caution that it may not break above there. So if you're looking to go long and looking to buy, you would actually want to do that on some sort of dip into support, maybe back at the blue zone, yellow zone, or pink zone, or you look for it to actually break that green zone and that black trend line. If it does an actual breakout, then it would give you confidence in the long shot. So until it does that, again, risk reward right now, reward is capped. You can't really expect it to break there yet. So I don't think you have a good risk reward. Risk is under probably at least today's low, if not deeper than that, and reward is being capped by the green zone. Only if it breaks that green zone does your reward potentially increase to the pink zone. Risk reward actually much better for going short here. If you were to go short, like if you would have done it back here, there may be opportunities for profit back down to the blue zone, or even as deep as the pink zone way down here at the very bottom of the chart. It's going to take a couple things for that to happen. We need this US dollar to find resistance and sell off. So far this week, it's been rising slightly. Of course, we know that interest rates are on everybody's minds over the next couple of weeks, but right now, US dollar on the day is slightly higher. The question is, will it find resistance and start selling off again, or will it continue to go higher? We know that crude oil has been mostly falling in the past couple of weeks, but it is also into support. We'll look at that in the trade room later today. We did get some disappointing news out of Canada yesterday, which gave it a boost to go higher as well. So we need things to line up. We need a sell-off of the dollar. We need crude oil to rise, and we need some better data out of Canada for this to turn around and go down. But this is a better place to make a trading decision. Low risk, high reward. If you're going to sell it, this becomes a place to look for those shorts. If you're going to buy it, you need it to break above this green zone for a reversal, really, because the trend has been down. So the only real reason, in my opinion, to buy is that it breaks that green zone right now. Otherwise, you're looking for a short. 4-hour time frame doesn't really change that, just gives you a view of the current price action. Again, here's our last couple of times challenging the green zone. Here we are now challenging it. But again, be careful that you assume that it's going to go up. Wait for it to break above there if you're looking for the long shot. Otherwise, into this green shade here, we'll zoom in like this, we may be looking for opportunities to go short. Risk and stop loss will be above this green zone. That way, If it does indeed break above the green zone, you minimize the impact to your trading account.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.